Welcome, everybody. It is 3:30 p.m. on Monday, July 9th. This is Patrick Zielbauer from Infinity Futures. Thanks again for coming to the event today. Let's read through some risk stuff, and we'll get right into it. Trading futures, options on futures, and retail off-exchange foreign currency transactions involve substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. Folks, only fund a futures account with risk capital. That means money you can afford to lose without lengthening your retirement horizon or affecting your ability to maintain your lifestyle. Okay, if you're not sure where you fall on the risk capital curve, so to speak, please feel free to have a conversation with your rep in our office. We'll make sure to have an objective discussion with you about risk. All right. Again, my name is Patrick, and every Monday, or almost every Monday, as most of you know, we do a live presentation on Sierra, some aspect of Sierra. I've been doing these presentations for a few years, been using Sierra charts for many years. And for those of you who are not familiar, Sierra is free with Infinity if you do a little bit of trading with us, 10 round turns every 30 days. So like one buy, one sell, 10 times in a 30-day period, waives the fee we would otherwise charge for the charts, which is $19.95. So it's a very inexpensive account to maintain. Sierra is a phenomenal program. One of the things that we'll highlight today as best we can is the ability for a person of average intelligence with respect to using computers. And I can still use this program very effectively. You don't have to be a developer to use this program at a high level. That's the reason I like the program. I have no programming background whatsoever, but even I can come up with some really fun things you can do that are effective and ways to consolidate information in a way that speaks to me. And I think everybody here will find that they can do that too. So let's basically get into it. So this presentation has a lot of ground to cover in a short period of time. So we're going to do our best to tackle it all. But essentially, what we're going to show you how to do is to decide upon a series of criteria and then how to effectively display when those criteria are met across a number of different charts in a concise format. So the idea is this. A lot of our clients trade more than one market. They don't only trade the E-mini. They don't only trade the NASDAQ. A lot of them trade the S&P. They trade the NASDAQ. They trade the Dow, the Russell, the crude. They trade the currencies or the bonds, etc. Or they trade on different time frames. So they might want to keep an eye on where things are at, in the same market across multiple time frames. That's possible as well. Well, when I use the word scanner in the title of the presentation, what I'm referring to is basically a window that shows you a visual representation of when something is true at that moment. And there's a couple of different ways you can do that in the charting program that we're going to cover today. So we're not going to have there won't be a ton of time for Q&A this time around, but let's try and start ripping through it. All right. So thanks again for coming to the event. All right. So what I did was I made 6 chart books, or is this 5? That's 5 chart books up here. And I forgot to mention, anybody who wants a copy of these files after we're done, if you want to use them on your own, please feel free to request them. Just send an email to your rep in our office. All right. We'll get them over to you. We're going to have this event posted in the chartingclub.com website and up on YouTube probably within a day or so. All right. So this is going to be one of those presentations where you're probably going to want a copy of the file to use afterwards in line with the presentation itself. All right. Okay. So before we even look at this too much, what I want to first do is demonstrate just the basic setup of how to open up a chart and how to apply some sort of visual result when a certain condition is true. All right, so I'm going to open up a new chart book here, and I'm going to move through this part pretty quickly because I want to cover a lot of ground, as I mentioned. And I'm going to add the moving averages study. So the moving averages study is like a moving average, except it has 3 moving averages in it, and then you can customize what they are. So mine are defaulted to an 8 and a 34 period EMA. All right, that's just the way they're set up. So if I go to settings, if I look at the settings and input section, EMA, 834, this simple 15 is, as you see in subgraphs here, hidden. It's not displayed, so I don't care to change that. And I have a little label here, 8 EMA and 34 EMA that I put on myself. So you can change these numbers if you want to, but that's just how I set them up. So I just have the moving averages study here. And what I'm going to do is show you just a really basic demonstration of how to use this color background based on alert condition study that is sort of vital to creating this visual scanner that I'm referring to. So I'm going to add that study like that. And what we want to pay attention to, and we'll cover this a little bit more as we go, in the moving averages study, there's this ID number 1 here. That's how we are going to refer to the moving average study itself. And then in the subgraphs tab, each line has a subgraph attached to it. So the 8 EMA is SG1 and the 34 EMA is SG2. So as a very, very basic example of how to use the color background study, I'm going to ask the chart to display a color when the 8 EMA, which is SG1, is greater than the 34 EMA, which is SG2. So I'm just going to go to color background study, change the color to something that represents up to me, like that. And the condition is going to look a little like this. And there's tons and tons of videos that we have online that talk about this. But ID1.SG1, which is the moving average study subgraph number 1, that's the short EMA, the 8, is greater than ID1.SG2. So if I just put this very simple condition in place and push apply, this is the behavior I get. This is the chart telling me that the one moving average is bigger than the other one. All right, then what I can do is duplicate that study like that and flip the greater than to less than and change the color like this. And here's our, our opposite. Okay, so the 8 EMA is less than the 34 EMA. So this idea is the basis for what I call the scanner. And what I'm basically going to drive at is that you can take these color background results and put them in other windows or at the bottom of the window or in a place that doesn't necessarily force you to look at this specific NASDAQ chart right now. Just as an example, if I were to duplicate this study, I have to move something out of the way here real quick. If I were to just duplicate this chart, and I'm going to tile them on the screen next to each other. In this chart on the right, just as an example, I'm going to move the resulting color into region 2, which is the same area where you would see a stochastic or a MACD or something like that, like this. And I'll just repeat that process for the other one here, like this. So this is the sort of the genesis of the idea, is that now by looking at the bottom of the chart, I can see not only is the 8 EMA above the 34 EMA, but I can also see how long it's been above it. This is going to come into play as I demonstrate a couple different things here. But this is the basis of the idea, is that if you have a series of conditions that you believe give you sort of an edge, or if there's a series of maybe 1 or 2 or 5 or 6 things, that when those things line up, you are in a good position to enter the position, or it's a sign to get out of something or stay away from something or whatever the motivation is, then you can tell the chart to notify you visually when those conditions are true. If you wanted to take it a step further, if you really believe in decision fatigue being a reality the way that I do with traders, and that is, too much stuff on the screen, choose at your ability to make good decisions as the day goes on, I believe that to be 100% true. You can even hide the moving averages themselves like this. So we don't even necessarily need the source indicator to be visible. We just need it to be there so that the chart can calculate its result based on it. Now these operators like greater than, less than, and, or, there's a few that we're going to demonstrate here today. Learning this sort of language, and that's, it's not even really right to call it that, is super, super easy. It's just basically some parentheses, some greater than, less than, equal to signs. There's a couple of operators like or and if you're going to combine conditions together. We're going to demonstrate that too. All right, so if you want this file, I'll save this one too as like a starting point, then make sure you request it and we'll get it over to you with the rest of them. So let's move over to this first sample that I wanted to talk about. Now, I am going to put a heavier focus in this presentation on the order flow side of things because there's a lot of different ways to use order flow in Sierra, and there's this misnomer in the charting or education business or whatever you want to call it that you need to buy really expensive order flow indicators that cost $5,000, from an ecosystem somewhere to get these results. I just don't believe it to be true. There's a lot you can do inside Sierra without having to buy anything. There are some cool add-ons that people have built for Sierra. Nothing I know that costs, $3 to $5 grand, but there's so much you can do in here with just a little bit of practice. And we'll get to that in a few, but I did want to cover a couple of specific examples. All right, so on the 5-minute chart, these are all 5-minute charts. So S&P, NASDAQ, Dow, and Russell, okay? And you see at the bottom, there's a couple of these color background conditions. So this is going to look pretty familiar because we've got an 8 EMA and a 34 EMA, and then we've got this very similar background color thing that I was demonstrating earlier. So the first part of this is just that. It is just an 8 EMA and a 34 EMA, and you can see that the color that we see down here that is from the color background based on alert condition study, which I renamed here, is based on the 8 EMA being greater than the 34 EMA. So nothing too mysterious. If you go to the settings section, you look at the alert, you're going to see the same exact logic we just used a moment ago. And you'll also see that it's in region 2, right here. This name, short name field, affords you the ability to put in a custom name. The reason why you might want to do this is A, if you're going to use the study summary up here, I'll get to this in a minute, or B, if you have lots of these color background conditions, you're just going to have a long list of color background based on alert condition, color background based on, and you're not going to know what's what. So if you have more than one of these on the screen, you may want to take a second and create a short name for it that's descriptive of what it is. All right, so the first one, 8 EMA greater than 34 EMA, that yields this blue color. All right, this one here, 8 EMA is less than the 34 EMA, yields this magenta color. And this one right here is if they're identical. So in other words, if they're crossing over. Every now and then you're going to see a black one. All right, that's not that common. All right here, etc. All right, so those are the 3 conditions that are creating this color scheme. And they're all in region 2. So what I did was I just added one, and then I just duplicated it a couple of times and just changed my alert text up here. All right, they're all in region 2. All right, then what we did was I added another study onto the chart, which in this case is the value area based on volume. So you got the value area high, the value area low based on volume, not time. So this is not like a market profile. It's more akin to a volume profile, which is something that I look at a lot. And what I basically did was created another set of conditions where I'm being told if the market is below value, okay, below the red line, that's this red behavior, whether it's in the value area, meaning it's between this line and this line, that's the gray area, or if it's above the value area high, which is this green line up here. So that's the behavior that's generated from this basically second instance of the color background based on alert condition. So if we go to the volume value area line study, we see it's ID number 2. And in the alert section, or excuse me, the subgraph section, we can see here which ones are which. So the point of control I have hidden, that would be like in the middle somewhere. Okay, I've got that hidden right now. And SG2 is the value area high, and SG3 is the value area low. So the way we would refer to the value area high would be ID2.SG2. And the way we would refer to the value area low, which is this dotted line down here, that would be ID2.SG3. So if we go into these conditions, I created one called above value. We use the letter C for the operator as of the current price, or the current price, the closing price of a bar. If C is greater or equal to the value area high, then I want to be notified with this color. Okay, if the current price is less than or equal to the value area low, then I want to be notified with this color. And as an example of using an AND condition, as we mentioned a moment ago, if it's between the two, I want it to be gray. So in this example here, we've got 2 different conditions separated by a comma. All right, if the closing price is less than the value area high, and the closing price is greater than, or I guess I could make this greater than or equal to, or less than or equal to, it doesn't matter that much. If the closing price is greater than or equal to the value area low, meaning it's above this line but below this line, then we are getting this behavior. And the way to tell the charting program to do it this way is to put all the conditions separated by a comma in a parentheses and just put the word AND in front. That means that everything inside the parentheses has to be true in order for the condition itself to be true. And all I did was add the color background based on alert condition study, put that code in, pick the color that I want, and put it in region 3, which is right down here. So region 1, Okay, region 2, region 3. So this is an example of how you can take the condition you're looking for and have it displayed in a very clear visual pattern. So you just, what ends up happening is you start to associate this color that you see with a certain series of conditions, and next thing you know it, you're trading a fast market like crude or the NASDAQ or something like that, and you can see that happening in real time. You don't have to look at all the indicators. And again, you don't even have to have all the indicators visible on the screen. There are certainly some instances where having lagging indicators displayed on the screen so that you can see things like trend of the line or whatever are useful, but there are plenty of situations, and I know you can probably go through your own charts and pick a few, where you really don't care what was happening before. You just care if the condition is true right now. If when you are deciding to get into a position based on a signal or a series of signals, if you care more or only about what is happening right now, as opposed to what is happening now versus what was happening, 1 or 2 bars ago, then you could make a strong case for cleaning up the chart by hiding stuff that doesn't need to be visible. So if you don't need the moving average to be visible, if you don't need the volume value area lines to be visible, you can just hide them. They come off the screen. You have a nice, clean chart with nothing on it. And you can still be told by the charting program when certain stuff is happening. So it's a really, really neat function, and it forces clients to go through an inventory process of their decision making. So instead of just accumulating all the indicators you've bought over the years or whatever and sticking it all on your screen so you can see everything at one time, this forces you to actually go through the process and say, okay, what do I actually care about when I'm getting into a position? Or if I'm in the market and I see this happen, what should I be doing? And just before I get into too much more of the technical stuff, one great thing about this idea is that it alleviates the responsibility off the client's back a lot in terms of to get in or out of the trade. So for example, if you have a bearish condition and you turn the background of the chart red and you're long the market and your bearish condition comes up, push flatten. Absolve yourself of the responsibility of making the decision. Your chart said it's a bearish condition, push flatten when you see red. And you just be surprised at how liberating that is. So it's a really neat process to force yourself to go through. It's kind of uncomfortable, in some ways, but it really is a useful thing to endure as you're going through this. And there's no one looking over your shoulder, like you were in a class or you had a boss or something looking over saying, "Oh, Tom, you shouldn't have done that." Slap in the back of the head, right? That you're alone in your office or wherever. You need to be accountable, and this is one way to force yourself to be accountable. It's a neat idea. Anyway, so let's talk briefly about this study summary. So there are basically 2 ways to create these sorts of scanners. One way is to do it visually using what I'm showing here down at the bottom, or one other way that's sort of built into Sierra a little bit easier, a little bit, I guess you could say, out of the box, is to use this thing called the study summary. So the study summary is accessible from File, Open Study Summary. It's right up at the top, right up here, Open Study Summary window. And what the study summary window does is it pulls all your charts into it. So you can see I have 4 or 5 minute charts up. It pulls them all in, and then it pulls the data from all of your indicators into this sort of table format. If you use the color background study like I have done, it also pulls the colors. So if we look at this, when you see something flashing on or off like that, that means that it was true for a second and now it's no longer true. I think that has to do with the market rallying into the end of the day here. But basically, the study summary is a way for you to display in a concise manner a series of studies, and you can be alerted visually when they're true. So like this S&P just went gray here, and what that meant is that the market just ticked down back into its value area. So that's not going to tell me a whole lot at 3:49 in the afternoon, but the idea is that if you do have a series of conditions that are hitting at the same time, especially across a lot of markets at once, that certainly could tell you something. Now, one basic issue that you'll have with the study summary is that it pulls everything into it, not just what you want. So there's a way to tell the program to have certain stuff displayed in the study summary or not, and I'm going to show you how to do that. Right now, the Dow just made a new high of the day at 3:50 in the afternoon. What an unbelievable day. And so you're seeing the value area thing come on here a little bit. But so you are going to get some flashing lights here, which is, it's not good for everybody, you know, but I guess it's just not as useful at 3:50 in the afternoon. But in the middle of the day when you got things firing, this could be a good way to display this info. And this window can be carried across chart books. So it doesn't always have to be on, you don't have to be looking at the chart book that is creating the study summary. It can be set to be on top all the time. All right. Now, one way to run into a problem with the study summary window like this, and I'll sort of demonstrate this here in this other chart book that we had. When I open the study summary window, you can see that it's pulling information about the chart itself that I might not necessarily care about. So what you can quickly find with this window is that there's too much data. So if you want to clear it out a little bit, you can actually go into the study section of your charts and you can tell certain studies to not display in the study summary. And it's controlled right here with this checkbox. So with the moving averages study, I have it by default set to not display. So include in study summary was unchecked. But if I check it, then what's going to end up happening is we're going to see, it's hidden here. So actually, let me try that again. Hold on. Let's do a brand new chart book here because I think I have a setting that's turning that off. So let me just add a NASDAQ chart here again. I'm just going to add a random indicator like maybe a MACD or something. Or let's just do the ADX. So if I add the ADX and apply it, it's this really light green line. You can barely see it. Let me just thicken that up a bit so we can see it a little easier. Like this. Okay, so this is the ADX. Now, if I open the study summary window now by going to File, Open Study Summary Window, okay, we're going to get the value not just of the the basic aspects of the chart like daily change and all that stuff, but we're also going to get the ADX value. So the problem is if you have a lot of studies on the chart, you end up with lots of these columns that you may not want. You can also do away with the basic info that you would normally see in the header up here, like daily change, net change, high and low. The way to get rid of that, if you want to clean this window up, is to go to Settings and uncheck this option that says Display Daily Quote Data Fields. If you uncheck that, it takes everything off except the studies. And again, if you end up with a chart that has a lot of studies in it, you can control which ones are actually displayed by going to Settings, and you can uncheck this option right here that says Include in Study Summary. So if I apply this change, it'll actually clear off altogether because there's nothing left on the chart besides it. All right, so by default, this is going to be checked. Include in Study Summary will be checked, and what you'll end up with the first time you open up the study summary on inside a chart book that has lots and lots of studies is you're going to have tons and tons of columns. So you'll want to go through and make sure that only the ones you want displayed are visible. All right. All right. So now that we've got and we're gonna. So this is one way to build sort of a scanner. One way to build a scanner is to create the condition you're looking for, use the color background based on alert condition study, and then open up the study summary and configure the study summary so that it looks like kind of like this. All right. That is one way to do it. There's only one issue that I have with doing it this way. And the issue is you don't get to see a lot of historical information about the condition unless you happen to be looking at the chart itself. So when I'm looking at this 8 versus the 34 EMA, I know it's true now, but I don't know just by looking at this window if it was untrue 10 seconds ago. If I look down here, I can see that it has been true for quite some time, right? Pretty much the whole day up until, right after the open. But that sort of defeats the purpose of this, because if I really want to see the context surrounding a certain condition, I need to know not only where it is now and whether it's true, but I also need to know if it was true in the past. All right, one example of how to do that, we're actually going to touch on a couple, but what I would like to do next is show this next chart file, which looks like this. So this is very similar, but what we did here was instead of using two different rows here for the colors, I combined both of my conditions into only 2 total conditions. So there's just not as many situations where this is true, but let's show you what we did. So in this example, you'll notice that there's only two instances of the color background based on alert condition study. All right, one of them I called up and the other one I called down. So in the up condition, I basically said, all right, we're looking for two separate things. The first is I want the moving average to be greater than the 8 to be greater than the 34, that's same as before, and I want the current price to be above the value area high. So we're only going to get the blue signal when the short EMA is above the long one and the market is above the value area high, which didn't happen for much of the day. All right. To the opposite, if we look at the down, this is an example where I want to see when the moving average is less than the 8 is less than the 34 and the market is below its value area low. All right, so we're seeing that with this magenta behavior here. The market is below the value area low and the 8 EMA is below the 34 EMA. All right, so why do people do this in general? The people who I have seen use this idea most effectively are people who have already realized that they tend to make poor trading decisions in certain circumstances. We're going to talk about this in the next chart book as well. But this is basically a situation where you're basically asking the chart to tell you when the market is way up and it is trending up on a short time frame, like 8 and 34 EMA. Or the market is down, it's well below it's below its value area low, which is the value area is a range that has been established throughout the course of the session. And when the market breaks below its value area low, that is a big deal, I would say. And the combination of that with the short EMA being below the longer EMA is arguably bearish in some cases. Okay, obviously not today, but the idea there is that some people do well under certain circumstances, or they do average in others, but they do really, really poorly in certain ones as well. And usually the really, really poorly outweighs the other stuff. So what I mean by that is if you're the type of trader who you find yourself just unwilling to go long the market and you really struggle with the idea of trading to the long side because you've been scarred by the flash crash, or you never know when the next shoe is going to drop, or whatever the situation is, then you may want to avoid trades that are setting up based on your particular set of conditions on markets that are proven to be very bullish so far in that session. So if you just find yourself just selling and selling and you just get run over and run over and run over, then create some definitions of what you would call a bullish market. And when those conditions are true, just don't go short. Problem solved for a lot of people. So it's all about acknowledging where you believe your own weaknesses already exist, and then let the chart tell you when you're least likely to win based on your predisposition and your past behavior. All right. Okay, so that's an example of these things being combined into one study. Now, the process of creating what I call the scanner, which is this little window here in the bottom right, this is what I would like to actually demonstrate. And then, we're going to show a couple of other examples related to the Ichimoku cloud and then a bunch of order flow stuff. All right, so let me show you how I built this window. All right, so what this window here is, this is an S&P chart that I actually have set to be blank. So I don't actually even see the bars up here. And what I'm basically doing is overlaying the result of these color studies onto the bottom of this S&P chart. And I'm using this as its own scanner window. That's basically what this is. So the way that I would build something like this, once I have my conditions looking the way I want, is if you go to File, New Chart, or just File, Find Symbol, or just click FS, and you can open up any chart. I almost always use the E-mini S&P for whatever reason. And you just get a separate window. Now, one thing I like to do when I'm building kind of like a scanner-like window like this is I set the background color to be different than my other charts, just for visual sake. And the way that you can set one chart to have a different color background than the others is if you go up to the chart menu and go to Graphics Settings -Chart right here, there's an option at the top that says Use Global Graphic Settings instead of these settings. So what this is basically saying is that the chart has its own system settings for the colors by default for everything. That's under Global Settings, Graphic Settings. But each individual chart window also has its own capability for the color background and other visuals. You just need to enable this window to have control by unchecking this. So if I just go to the background here and change the color like this, because this is unchecked and I push apply, only that chart is affected by the change that I just made. All right, so only that chart is affected. Now, how to get these color results down here or into the chart somewhere? What we do is we use a study that's called study price overlay. And what I basically end up doing is I add the study price overlay study, and I end up just duplicating this a bunch of times and then changing something about it, like what chart it's being originated from. All right, so the study price overlay is commonly used in Sierra for people who want to say take a 60-minute chart with a 34 EMA and then put that 60-minute 34 EMA onto a 5-minute chart. That's really where the study price overlay comes in handy. It's when you want to take something from a bigger time frame and put it onto a smaller time frame, something like that. But it also is effective in this context. And here's how we would do this. So I put on study price overlay and go to settings. And in the settings and inputs, there's lots of choices. The most important ones are what study are we actually overlaying and what region is it going into. So if you click on study to overlay at the top, you'll see this drop down section. So the first thing I'm going to do is overlay from the 5-minute E-mini S&P. So you're picking the chart here. All right, it's chart number 1. It's this number right up here, chart number 1. And then what are we overlaying? Well, I don't really want to overlay the main price graph. I don't want to overlay the moving averages or the volume value area lines. What I care about is the result, the color background study that I renamed to up and down. So I just choose up, put it in region 2, and push apply. And you can see that right away I now have these colors here are these signals right here. All right, then what I do is I just duplicate that, go back to settings, and change the overlay study to down. Keep it in the same region, region 2, like that. Now you might not see something right off the bat happen. That's because if we scroll back in time, we're going to see this magenta area, which is this right here. All right, so we're using study price overlay to bring this data across. All right, now from here, you can mess with the scaling, and we're going to have to do that a little bit anyway to make it look more like this. But from here, there's just a lot of duplicating or moving stuff up or down visually on in the studies window. So if I go to studies here, what I actually like to do is I'll actually duplicate the up study that I've got here, just duplicate, and I just move it down to the bottom. And then I go to the down one and I duplicate it, and then I move it down to the bottom. So why do I do that? Because I don't have to mess with any of the other settings besides the obvious stuff like what chart it's coming from. So I have this ID number 3 that I just added. You can see the order that they've gone on in here. And I'll go to settings. And in this case here, we're taking the up study, but we don't want to take the up study again from the S&P. We want to take it from the NASDAQ this time. And we want it in region 3 instead of region 2. So I go like that, push apply, and now we've got the result of the NASDAQ right here. Now I go back to this other duplicate I made like this, study to overlay, NASDAQ, the down, put it in region 3, and we get that behavior. So that's what we're seeing right here. So here's these blue lines and these 3 magenta lines, that's this, and then this blue area is this. So it's a really neat thing here, because what we're starting to do is we're not only building a window that can show us the condition, but we're also getting to put the condition in the context of time. And this becomes especially useful, as I mentioned, for people who are trying to keep themselves out of circumstances where they historically have done bad, like trading to the long side in a market that's getting it's butt whooped, or trading to the short side when we're seeing nothing but rallies. All right, so I can just repeat this process a couple more times. So I just duplicate this here, move it down to the bottom. That's ID number 5, and I'll duplicate this, move it down to the bottom. So we got extra NASDAQs here, so let's go and change these. NASDAQ I'll change to the Dow or the Russell. Sure, why not? Put it in region 4, like that. There's the result for the Russell. And then for the NASDAQ here, we need to change that also to the Russell. Region 4. There we go. All right, that's the Russell. That's this stuff right here. And then let's just finish it off with the Dow. So I'll just duplicate this up study over to the bottom. Duplicate this down study, move to the bottom, and then put this in region 5. There's the Dow result, which there isn't really much. Region 5. There's the result for the Dow. So, this is the beginning of, what we're getting at. Now, you can clean this up a little bit. If you want to get rid of some of this text, you notice that this down here looks a little bit cleaner. You can go to the studies section, and in the graphic settings under subgraphs, you can uncheck these two options right here, display study name and display input values, and it'll clean up a little bit. You do want to have this first one checked here that says display study names, subgraph names, and value. Otherwise, this all goes away, and you're not going to know what market you're talking about. So I do keep this first option checked, but if you want to uncheck these two, it will clean up your. You know what? I think I actually want to keep the study name in there. Yeah, so we want to keep the study name. We just don't need the input values, which is a lot of what the text is. So study name should stay. That way you're getting the chart that it's coming from. But the input values, like this stuff, you can clean up. Display input values. And this is something I could have done earlier, because when I was duplicating this, I wouldn't have had to do this one by one if I had done this properly at the beginning. Now, you don't actually have to hide the main price graph. You could leave the S&P chart up there if you want to. But if you do want to hide the bars up here just to really clean things up, if you go to chart settings, there's two things that I typically do with the scanner. One is I display the region dividing lines, which are these lines that separate everything. So it looks like this. And then you can make the chart just blank. So if you go to the graph draw type, there's all these different choices about how the bars are built. You can just choose blank and it just goes away. And so you end up with a window like this. So this is an example of the scanner working in action. And one thing you can do with charts or with the study summary, as we described earlier, is in the window menu, there's an option here to say window always visible. So if I go to another chart, I still have this scanner going. So as long as this chart book is running in the background, I could still see my scanner. So as you know, with Sierra, it's a pretty light application. You can have a lot of chart books running with a good amount of data before you start to have performance problems. So what you can end up doing is you make a couple of chart books or one chart book that's got all your stuff in it, and you could actually be looking at another chart book and still have your scanner visible on the screen. So it's a quick way to see what's going on across a wide variety of markets or time frames, and then still be able to make decisions quickly. So it's a pretty neat idea. Now I'm not going to demonstrate how I did this one, but I will show you just another one that's kind of neat. Actually, let me unhide this or hide this window here so it's actually not visible all the time. There we go. This is the originating idea of this was based on the Ichimoku cloud. Anybody here heard of this idea? So blue is when the market's above the cloud, red was when it was in the cloud, and red when it's below the cloud, or red when it's below gray when it's in the cloud, red when it's below the cloud. So what we had a lot of people who were saying, Patrick, I'm doing just what you described earlier. I can't trade markets that are so obviously bullish. I just want to smack myself in the head. I can't believe I did that. So if you're looking at the S&P chart and you're looking at the scanner right here, and you know that you've got a predisposition to take bad shorts on running markets that are running higher, would you want to be trading the S&P when you look at this? Probably not, right? So if you trade really well to the short side, or if you like to trade choppy markets, like look at this crude oil one right here. It's up, it's in, it's below, it's in. If you like to trade chop, like you like to scale in and out and watch the market bounce back and forth, you might like to trade crude in this environment. All right, if you are someone who trades more to the short or flat side, or if you feel a little bit more comfortable to the short side, and you're looking at the 10-year note and you say, okay, well, it's in, it's below, it's in, it's up a little bit, but this is mostly down, then maybe you should be trading 10-year notes today. So this is to me is a real world application, but it's not just the chart. The chart's not going to do the job for you. This only really works if you have some understanding of where you tend to go wrong on a repeated basis. And if you can identify that, if you've been doing this long enough to have identified those problem areas, then this is for you. This is where this might come into play and actually be worth something. All right. So we're not selling some magic indicator with this. This is garbage in, garbage out. I mean, you have to have valuable data or real quality data to put into something like this for it to be worth something on when you're looking at it there in the heat of the moment. Right. But a lot of our clients do have some semblance of what where they have issues, and a lot of it has to do with taking obviously counter trend trades in very strong trending markets. So if you can filter out some of those, maybe you can avoid some costly mistakes without racking your brain too much as far as the complexity of the studies go, because it looks complicated, but once you learn how to do some of these real basic conditions, it's really not that difficult. All right. Okay, now let's go to the order flow stuff. I did want to talk a little bit about this. This is a really hot topic in our business, and every day we get people asking us about order flow this, order flow that. So, there's nothing wrong with looking at things this way. There tends to be a predisposition among traders who look at order flow to trade on a very short-term basis. So when I build these charts, I build them on really small time frames, like 55 ticks or 55 trades, as I did here. This chart here is not something I would ever use. I built it so I could demonstrate some of the stock indicators that Sierra has that are related to order flow or volume. So one of them is this study up here that's showing those values on the bars themselves. This is basically showing the delta, volume delta in a bar. And that study is called the ask bid volume difference text. It's this one right here. So what it does is it plots a value of the difference between the number of contracts done on the bid or the offer and then color codes it. So if the delta was, if there were 54 contracts more executed on the bid than on the offer, you're going to see a negative 54 here. So that's what that is. You've got just ask volume here. You've got bid volume. You've got bid volume versus ask volume, and then the delta being displayed in this sort of blue line. And then you've got the ratio of one to the other. Down here, you've got a study called numbers bars calculated values. Okay, that negative 54 example that I gave here, okay, that's the same value you see down here. I know this text is really small, but I was trying to fit a lot on one screen. This is like a table format where you can put things like total volume, volume per second, the range of the high to the low, the point of control value, and pretty much there's like 40 different choices of things you could put in here. So if you just like to see the values themselves, and that's part of your game plan, then this is a way for you to use that. So there are lots of different order flow tools that exist within Sierra. The key is to pick the ones, obviously, that that speak to you. And in my opinion, this is trading on a very, very short time frame using order flow is a difficult proposition because people tend to cut their winners off really, really quickly and let their losers run, which that's not really unique to order flow style trading. It's just unique to short-term trading. But the fact remains is that order flow and ask bid volume analysis is a central talking point in our business, and it's an area of strength in Sierra. So what I wanted to do in the next chart book, and probably the last one we covered today, is show you how I just built a really basic study that uses some order flow stuff and some other stuff to do this same sort of scanner behavior. And here's what it is. All right, so what you see here is S&P, NASDAQ, Russell, and the Dow, and then crude oil, okay? And then we've got the scanner here in the bottom right. And what this is basically doing is similar to what we were doing with everything else before, is we're looking at conditions on the chart, we're generating a color background behavior, and then we are overlaying that background behavior onto our scanner. The first thing I'm actually going to do is remove the volume indicator at the bottom because I actually didn't use it at all, and I just want to clean the screen up. So we're going to get rid of that. What I decided was, in this example, is that I was going to be looking for a long position, I was going to be looking for an increasing bid-ask volume ratio, okay, and then I was also looking for this indicator, which is called a volatility trend indicator. It's kind of like a parabolic SAR, parabolic stop and reverse, where it's used to, when you see this line is green, it's arguing for a bullish case. When it flips over to red, it's arguing for a bearish case. All right, so this color background is encompassing a couple of things about these two studies, and that's what we're going to demonstrate first. So if we go to studies here, all right, there's only 4 studies on the chart. One of them is the bid-ask volume ratio. All right, that's study ID number 5. All right, there's the volatility trend indicator. That's study ID number 1. And then there's one color background study and another color background study I just called buyers and sellers. All right. So for buyers here, if we go to the alert tab, you're going to see this code that looks really, really scary. All right. For those of you who've never seen this before, it looks intimidating. It's really not. We're going to do this piecemeal. All right. The first thing I was looking for is increased bid-ask volume ratio. So the way to do that was to identify the bid-ask volume ratio itself and then tell the chart that I wanted to see its value increase a certain number of times in a row before the condition became valid. So if we look at the bid-ask volume ratio, it's ID number 5. This is an easy one because it really only has one main subgraph. That's the subgraph 1. There is a 0 line, which is this thing, subgraph 2, but this is really the one we care about. All right, so it's SG1. So ID5, SG1. So sometimes when I'm using these studies, I'll bring up Notepad and I'll just type these things out. So if I were saying the bid-ask volume ratio is going to be ID5.SG1. All right, let me make this bigger so everybody can see it. Okay, so this is the first piece of my study. Okay, ID5.SG1. All right, ID5.SG1. So this is how we're going to refer to the bid-ask volume ratio. All right, the other one is the volatility trend indicator. That's ID1, and it only has really one main subgraph that I look at, and that's SG1. So ID1.SG1. Okay, so vol trend ID1.SG1. So this is how we are going to refer to these two studies when we make our condition. So the first thing I decided was I want to see the bid-ask volume ratio go higher, but I want to see it go higher, not just one bar, for one or 2 bars. I want to see it go a little further. So in this example, we're basically looking back 3 bars. All right, and the way to tell the chart to look at the value of one subgraph versus the value of the same subgraph X bars ago is to use a format like this. So we have ID5.SG1 is greater than ID5.SG1 with a -1 in brackets, like that. So if I wanted to be able to say, okay, I want to see the bid-ask volume ratio increase, X amount of bars in a row, you end up with a code that kind of looks like this. So the current bid-ask volume ratio is greater than the bid-ask volume ratio 1 bar ago, and then there's a lot of copy pasting, when you're doing this. And then the ratio 1 bar ago is less than the ratio 2 bars ago. So current bid-ask volume ratio is greater than this volume, and then this one, this should be greater than, sorry. All right, then the bid-ask volume ratio 1 bar ago is greater than the bid-ask volume ratio 2 bars ago. And then you just sort of repeat this process. And what I did in this example was I went back 3 bars. So 2 bars ago is greater than 3 bars ago. So this is basically one of my conditions. So if you were looking at the color background study alert tab and you'd never watched a presentation like this and you just looked at this for the first time, your eyes would just glaze over. But when you start to do it piece by piece like this, you realize it's just a lot of repetition with some small variables. And you just got to keep your commas and your parentheses in order. That's really the hardest part. The rest of it, should come pretty easily. So that was the first condition I was looking for. All right, so I'm looking for that value to be increasing. Now, the second condition I was looking for is I want to see the volatility trend indicator to be below the current price. Okay, it's green, it's sitting below the current price. It means it's saying it's still bullish. So the way we would indicate that is using the study subgraph identifier, ID1.SG1. Excuse me, ID1.SG1 is less than C. C is how we look at the current price or the closing price of any historical bars. So I basically have 2 giant conditions that just need to be put together. Actually, 1 giant condition and 1 really small one. So I just separate them by a comma like this. and put the word and in front, put the whole thing in one big parentheses like this. And that is really, this is exactly what you see up here. All right, then I just paste it into this window, push apply, and then we're going to get that blue color background. Now, if we go to the seller's option, which is the next one here, open that up. This is really just the opposite. All right, here's the bid-ask volume ratio less than the bid-ask volume ratio 1 bar ago, and then 1 bar ago less than 2 bars ago, and then 2 bars ago less than 3 bars ago, and the volatility trend indicator is greater than the current price, meaning it's up here, i.e. it's bearish. So as an example, all right, this one right here that we can see, this is an example of that, happening. Actually, this is probably a little bit of a clearer example. Okay, if we look right here, we've got a decreasing bid-ask volume ratio, and we've got the volatility trend indicator above the current price. So this condition is true, according to this chart. So this is an example of how you can use those conditions, identify those conditions, put them in an easy to see format using the color background study, and then overlay them using the same method we did a moment ago onto another chart that sort of acts like the scanner. So again, this is a really short chart. This one is 144 ticks. So in something like the S&P or even the NASDAQ, you're going to get lots and lots and lots and lots of bars. All right, you want to be conscious of that. But if you are, if you're a quick trader, if you got your finger on the trigger, you're very active, or you like to be like, what you would call a scalper or something like that, then this is a scanner that you could have up on your screen near where your domes are. And if you see something go blue and you have a good reason to be okay with a long, that could be a quick way for you to enter a long position before you really even had the ability to look at this stuff in real time and make the decision yourself. You could take it a step further. I'm not going to demonstrate it here today. We've done a couple of webinars about this, but there's also a study that we have called Trading System based on alert condition, where you can actually enter orders with the same logic. So later on, if you get to the point where you feel like you're still missing stuff, there's actually a study that you can add to your chart called Trading System based on alert condition, and you can add it, and you can actually use the same sort of alert condition to generate actual trades. Send orders to trade service, evaluate on bar close, is it enabled, only work between this hour and this hour, that sort of thing. So you can take a condition that speaks to you, and you can actually make yourself an automated trading system without doing any real programming. All right, so I wouldn't encourage everybody to just jump in tomorrow and start firing trades automatically, okay? But if you do get to the point where you feel like that's a real possibility, then Sierra can allow you to do that without anything beyond what you've already accomplished with respect to the code. And I use that term loosely. So it's basically like an automated trading system or robotic trading or gray box or black box trading, Chris, correct? All right. Yeah, so it is a neat function. I mean, the goal of something like this is to help you get the wheels turning a little bit as far as what conditions you actually do use while you're trading. It's not fun to disable stuff that you've paid for or that you bought and you never you never really got your head wrapped around it or something like that. But if it's not benefiting you, or you don't believe it to be benefiting you, right now, then you could make a strong argument that it actually might be hurting you. And so, turning something off on a temporary basis doesn't mean you have to throw it in the garbage disposal and you'll never see it again or never be able to use it again. But this process does force people to actually look at what they're actually using to get into positions. And you might find that it's a lot less than what you think. If you have 18 indicators on the chart, you might find that only 3 or 4 of them are actually being evaluated by you when you get into positions. The other 12 are just chewing away at your brain power. And this is a great way to get some of that stuff off the screen, or at least temporarily hide it. Okay, so there was a couple questions that came through. We don't have a ton of time for Q&A, but I will get through a few, and we will post this up on YouTube, like I mentioned, and maybe we'll go into a continuation of this next week with some of the automated trading stuff. But there were a couple questions that came through. Number one, could you make any way of making a library of the condition alerts that you use? So we are starting to build something like that out, Stu, with the Charting Club. I will mention that now before I forget. We built this sort of sister website called chartingclub.com. We are right now in the process of building out a very large series of videos here. So there's more going in here every week. And if you go to if you sign up for it, it's free, and go to contact, you can submit what topic you want. And we are keeping a list of these. In fact, I got another one from our management today of things that, like, here's a summary of the things people have been looking for. So we are actually building a searchable database of things like this, and that's going to be where this stuff is stored. So we are in the process of doing that. All right. All right. So there was a couple of questions. Yeah, Tom, the question about the study summary. Yeah, that's all based on the order, I believe, of the studies in the studies window. So the columns in the study summary can't be manually reordered. I don't think that Sierra has a high priority, to change that, but we have mentioned that to them. Stu, in that example, the value areas were based on today. They could be based on yesterday if I wanted them to be, but I usually use the value areas based on today, not yesterday. All right. Keith, yeah, the study angle. I have covered the study angle study a couple of times with respect to a client who had a color background study that was based on the angle of two moving averages. If it exceeded a certain value, then he was using that as a reason to get into a position. So maybe we'll incorporate something about that next time. All right. Chris, do you have the TD sequential count or the Williams acceleration, or is that what that is? Acceleration or some distribution maybe? I think there are. I'm not sure. Accumulation, yeah, something like this. Yeah, so accumulation distribution. Yeah, so that's there. All right. Okay, well, folks, I think that's probably where we will leave it for now. I do appreciate everybody coming to the webinar today, and this is one of those presentations where there's just no possible way to cover every aspect of every one of these things in 1 hour. But hopefully, you still got something out of it, and we'll continue this discussion, maybe at a slightly different level next week as well. But certainly request a copy of the chart files if you're interested. We're happy to send them out. Bring your buddies to these events. It means a lot to us. Every week we get a few new people here that have never been in our database before that are coming specifically for this webinar. So I really appreciate you doing that, sending your friends and referrals in. It means a lot to a firm like Infinity. Almost all of our business is referral based. So if you're working with us here and you feel like part of your trading group or your trading buddies could benefit from the links we will go to do these sorts of presentations and keep people on the right side of things as best we can, then we certainly would appreciate you referring them over to the person in your office that you normally interface with. All right, it means a lot to us. So thanks for doing that. All right, folks, I appreciate it. Everybody have a great night. I'm going to read some risk stuff one more time. And again, please feel free to email your rep in our office for a copy of the chart files. We'll get them out ASAP, probably first thing tomorrow morning. I'll have them out to everybody. All right. Okay, everybody. Thank you. We'll see you next time. All right, trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. All right, everybody. Thank you again. Have a great night.